Welcome back. Mark Fidgett here for notapennydown.com. Today's video, I want to talk about things Garth Turner has been saying. I want to talk about the new rules, and I want to talk about the bad press that the zero down payment has been getting. In fact, I actually want to show you an example that demonstrates that in my mind, the zero down is a much better risk than, say, a down payment mortgage. Now, obviously, there's some flaws in that scenario, but I want to show you why I believe this. So what I've done here on the board is I've given two examples. One is a 5% down example, and one is a zero down. Now, as you probably already know, the new rules say that if you're going to take, say, a discounted rate, say you want a variable, you get the variable, but you have to qualify on a posted 5-year rate. So this example takes into consideration a $250,000 mortgage. And let me show you this. So you want a variable, or let's say you want the best 5-year rate. Today, it would be 3.64. Now, if you wanted a variable, you'd have to qualify on the posted rate, which is today 5.39. Now, if you want the 5-year rate of 3.64 and you don't even want a variable, then you don't even have to qualify on the 5.39. You qualify on the 5-year rate. But this is where this example is flawed. If you do the zero down, you have to qualify on the posted rate, which is today 5.39%. Now, you don't only have to qualify on it, you get the mortgage payment that goes along with it. So if you've got a $250,000 mortgage at 5.39, your payment's $1,510. You're going to have that payment of $1,510 for 5 years. Let's look at the guy that went with the 5-year discounted rate of 3.64. He's going to have to qualify on 3.64, which is a payment of $1,266. But let's also look at the guy who takes a variable. He has to qualify on this 5.39 as well, which is a payment of $1,510, but he doesn't get it. Few days after he signs the mortgage document, granted he qualified on 5.39, but he's only getting the payment based on a variable, or in this case, the 5-year discounted rate, which would be $1,266. Now let's look at these two scenarios and fast forward 5 years. In 5 years, in this interest rate environment that we're in, I'm sure we're going to see a little bit of movement. So let's just say, for argument's sake, 5 years from now, the 5-year is 4.5%. Guess what? When this guy comes out of a 5-year, he's got some payment shock. He's going to have a payment that's higher than one he has now. But look at the zero down guy. He started at 5.39 with a payment that went along with it. In 5 years, he's going to come out at 4.5. He's going to have a payment reduction. So you may say, okay, so what's the big deal? Here's the big deal. This guy had to qualify on a posted rate if he wanted a variable. But regardless of the fact that he had to qualify on a posted rate, his payment isn't that posted rate. His payment is his discounted rate. And experience shows that people budget based on their overhead. And when I say overhead, this guy's only going to budget on a $1,266 a month payment. 5 years from now, he's got a pretty big payment shock. Whereas the zero down guy, he's got a budget on that 5.39% rate that he actually had to qualify on, unlike the zero down or high ratio guy. So if you look at this example, the zero down guy is actually a more solid scenario than the high ratio guy. Now, granted, if rates go through the roof and you're up at 10%, both these guys are screwed. But just because the government made their changes and said qualify on this rate, listen, you can qualify on it and that's sweet, but you don't get it. You don't get that rate. So people don't budget on the fact that, well, I qualified on it, so I'm going to budget for it. They don't do that. So the zero down program is a solid program. And for that reason, I think it's a very strong scenario. So listen, it is available. I can do it for you. Obviously, there are some constraints, credit, income, and all those things. But if you have any questions whatsoever, whether it's about zero down or just the market, or you have some questions about credit, 604-273-2002 on the web at www.notapennydown.com. As usual, make it a great day, and we'll talk to you soon.